Hi, welcome to Maltbie's Minute on the Market. I'm Robert Maltbie. So let's get into it. We have an interesting market, of course. If history repeats itself and the unexpected always happens, then how incapable must man be of learning from experience? That's George Bernard Shaw. Let's compare the Nifty 50 and the ARK to underscore that point. Nifty 50, one decision stocks, game changers, creating new industries, names like Eastman Kodak, Polaroid, Howard Johnson's, McDonald's, Xerox. Great stuff. They also traded at mightily high valuations, 50, 60, 80, 90 times earnings. Sound familiar? Then we had interest rates take off, jumping from 4% to 8%, doubling on the 10-year treasury. That is toxic for long duration assets, particularly high multiple stocks. Do we have that setup happening before us with the, and is this the kryptonite for the disruptive, innovative ARK portfolio, fabulous new companies growing rapidly like Tesla at 95 times, Roku at 125 times, Teladoc Health at 133 times adjusted earnings, assuming no operating losses and high margins. These companies are providing rapid growth. On average, the top 10 holdings in the ARK growing at about 45%. But the multiples are much, much higher. Therein lies the rub. Interest rates starting to pick up. We think they're heading higher than what is anticipated and what's priced in the market. How much higher? Let's get to that. Let's look at our major market indicators, which are bullish overall. We're going through this type of rotation again from the high flyers to the low flyers, the reopening stocks, and that's the impact that's happening. Our indicators, the positive ones, include the technicals of the market. Market's still above their critical support and moving averages. The earnings momentum off the charts. Best quarter reported in nearly 2 decades. Monetary, very positive with the Fed, pumping, M2 growing very rapidly to get us out of the woods of this shutdown. On the negative side, we've got a lot of bullish fever going on here, giddy investors. We have a lot of IPOs coming to the market, a lot of SPACs, maybe a little frothy there. But net, we're to the good. I think we're in a bull going through a painful type of adjustment here. Moving to our action call, our stock of the month, Build-A-Bear. The warm, cuddly, fuzzy Build-A-Bear maybe deserves a nice spot in your portfolio here. Build-A-Bear, here's what we see unfolding. As you know, similar to GameStop, they're going through some transition. They don't have the short position. Retailer, the world reopening, retail sales increasing. Month of January up 5% from the previous month. The category of Build-A-Bears in up 8%, even stronger. We're looking at consumer confidence. That's picking up nicely. That's very favorable for a company like Build-A-Bear. Inside the company, they're restructuring, revamping, reshaping. They have a big movement to e-commerce. That category up 167%, and they're cutting costs with the profit margins increasing nicely, up 720 basis points, while they make that shopping experience much more virtual with some very high-tech 3D. Put you right there. So Build-A-Bear trades at a big discount to its group, about 50%, more than 50% price to sales and price to book. If it just recovers to a 50% discount, we're talking about a $9.50 stock. So good upside with Build-A-Bear. Finally, in wrapping up, I want to encourage you to go to our website, singularresearch.com. Take advantage of your complimentary trial. Get in front of some of our new ideas, new recommendations. Last year, our top 10 outperformed even the ARK, up over 240%, including names that are known to obscure: Roku, Magnite, Some names have done very well. Beyond Meat also amongst our top 10, and other less known names all performing exceptionally well. That's what we want to keep focusing on to help enhance your return in what will be probably a pretty tough year to just sit and hold forever. I'm Robert Maltbie. This has been Maltbie's Minute on the Market. Thank you.